What is happening, everyone? Happy Friday. Welcome back to another Dividend Happy Hour. Hey, real quick before I forget, I have a hard stop tonight at 5:45 p.m. or 8:45 if you're on the East Coast over there, which is in about 45 minutes. Nonetheless, what I'm trying to say is we're going to cut the stream a little bit short tonight. I apologize in advance. We will make the most of our time, though. Hope everyone had a great week. Pretty good way to close out the week. I don't know about you guys, but I was actually up, which I think was maybe the first time all week that I was up in the portfolio. So we closed out the day up 0.6%, still holding on to a $110,000 market value here in the portfolio. But yeah, can't really complain. Can't really complain. How are you guys? How was everyone's week? I see there's 41 of us in the stream right now. Before the stream started, I saw a couple interesting questions come in from Korean Cardboard and Fast Eddie. So we'll definitely get to those here in just a few moments. And also with that said, if you guys have any stocks you want to look up, if you have any investing questions, drop them here in the live chat and I'll save them as we go and try and get them answered for you. But guys, why don't we kick this thing off the best way we know how? Grab whatever it is you're sipping on and cheers. Here's to you guys. Thank you so much for tuning in for another Dividend Happy Hour. This is episode 149. We have almost done 150 of these things. That's pretty crazy. I guess we've been doing this now for, what's it been? Since sometime 2022. I know we talked about this in a somewhat recent stream. It was like August or September 22 is when we started this. So I think we're coming up on about 3 years of doing it. But anyway, cheers. Here's to you guys. Thank you so much for tuning in and for always supporting me in the live stream and the channel. It really means a lot. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because that's really what's bringing us all together tonight. So cheers. I knew it. Every single time I bring this cup, show this cup in a video, I always get comments about it. Yes, it is from the Eras tour. We actually didn't go. My wife's aunt is a big Swiftie, and so she got us this cup. And I like sipping out of this cup because because it is huge. This thing holds like 40 ounces of water. And yeah, I'm a little bit behind on my water today. So, just big cup, straw. This combination really helps me get more liquids in. It really helps me catch up on my water. So I like sipping out of this thing just because it helps me stay hydrated. Good cup. It's a good cup. But yeah, every single time, everyone's so concerned about what's on the cup, which is funny. Guys, let me know a few things here in the chat. Okay, Aussie dividend. Hold on, bear with me, guys. So let me read this comment. For the video series Deeply Discounted Stocks, ROP. It's funny, I'm going to be coming out with this month's installment of that tomorrow. ROP, it's Roper Technology, right? Yeah. Stock you looked at a while ago in a happy hour is barely coming off a 1-year low. Curious on your thoughts now, considering it's sub 500. Okay. Well, let's add that one to the list. We'll go through it here in the stream. But guys, I was going to say, sorry, I'm all over the place, but let me know a few things here in the chat. Number one, I want to know, what did you buy this week? What did you add to your portfolio? Personally speaking, I just picked up a little more SGVT, which is just the Schwab government bond ETF. I am thinking about starting to dollar cost average into Zoetis again. I've said this before. It's getting to be a pretty full position in the portfolio. If we're just talking the taxable account, it is. Let me show you guys. Let's go over here. And by the way, you can download this portfolio tracking spreadsheet. There's a link to it in the description of the video. Totally free to download. But if we're just talking the taxable accounts, Zoetis is now 8.5% of that. So it is below my 10% threshold that I kind of like to adhere to. So there is still some room there. But also, if we look at it from a let's go over here to holdings. If we look at it just in terms of the entire portfolio, including everything that's in my Roth IRA. Sorry, guys, it's taking a second to load. It's only about 7%, just under 7% of the portfolio. So holistically speaking, if we're looking at the entire portfolio, there is still room to increase it. And with where it's at now, I mean, it's 143. It was as low as like 139 earlier this week. I actually think yesterday it was in the 130s. Down almost 6%. Now is not a bad time to dollar cost average and put some of this money to work. Zoetis, I think, is a very high quality company. I love it. It's already a big position. So I don't want to put too much more into it, but I do think there is a little bit of room to add to it. So anyway, all of that's to say, sorry for the tangent. Let me know what you guys bought this week. I'm very curious to know. That's number one. Number two, what are you guys sipping on? You guys see I've got my my Taylor Swift cup here. I'm actually just sipping on some water. Got a little flavoring in there, like a flavor packet, but pretty boring. Like I said, I'm trying to stay hydrated. So just sipping on some water. But let me know what you guys are sipping on. Number three, did anything cool? Oh my gosh, hold on. Come here. Come on. Come on. What are you doing? Here, peanuts right here. Number three, did anything cool happen to you guys this week? Anything interesting happen in the portfolio? Maybe you hit an all-time high in your portfolio. Maybe you have 500 shares of SCHD officially, which would be a pretty big payout coming up. A few days, it's 27. I think on Monday, right? We get that payout. But anyway, any cool things that happened to you guys this week in the portfolio, any milestones that you hit, share them here in the live chat. We'd like to share in those accomplishments with you. And also number four, I want to know if we have any first timers here in the Dividend Happy Hour. In case this is your first time to the live stream, we typically do this every Friday night at around this time, starting at 5 p.m. Pacific time, 8 p.m. Eastern time. Usually we run it for an hour or so. And as you can tell already, it's pretty much just like a random variety hour. We're just coming and shooting the breeze, talking stocks, having some fun. So yeah, let me know those few things in the chat. Let me see what you guys have to say. Matt's in the building, bought some waste management, UNH, and his 517th share of SEHD also reached $3,400 in projected annual income. That's awesome. My man Nathan's in the building, got some ice water in a reused McDonald's cup I got earlier today. Nice. There we go. Darren's here. What's up, Darren? I was able to start 2 new positions this week, Uber and SPMO. Hope you had a great week. I did, my friend. Thank you so much. Ace said HH. That'll pull up here. What is HH? I kind of recognize that. Hart Hanks? Interesting. I actually don't know that one. Oh, Shane, can you share what you think of PAC, which is PACCAR, right? I actually recently did no. What? PAC is are you talking about like the Mexican airport stock? Grupo Aeroportuario del Pacifico. I know I butchered that. I'm sorry. Lo siento. What's PACCAR? PACCAR's is PCAR, not PAC. But yeah, are you talking about the Mexican airport stock? If so, I'm actually a pretty big fan of it. And this is we can go through it. We'll go through it. We'll add it to the list. But yeah, just confirm with me, Shane, that that's the one that you're talking about. Vasco picked up some Zoetis, Procter & Gamble. That's another one, good one to buy right now. Decent, actually. And some Merck. But continue with my 8% in cash. Nice cash position. That guy added some NVIDIA and sipping on some Pepsi and Jack. Nice. There you go. Pat, what's your thoughts on Starbucks closing stores? We'll circle back to that. That's a good question. Thrawn bought a little more Colgate Palmolive and Zoetis. Nice. Good stuff. Oh, nice. Nathan bought 2 shares of Sprouts Farmers Market. Interesting. And 1 share of McDonald's. Nice. Very nice. Chris with the usual suspects. Good looking stocks and ETFs right there. There you go. Ooh, Aussie Dividend with some big buys. Dropped 2K across 2 positions. Bought more Life 360 and some Wise Tech, aiming for 100 shares of Life 360. About halfway there. Nice. And about to cross the 100K mark between the portfolio and retirement. Good job. Anders, what's going on, my friend? Bought 2,000 into SGov. Nice. That's kind of similar move as me. 200 into Realty Income. There you go. But my dividend portfolio hit 30K. Good job. Holy cow. Look at this, guys. Ace just hit my 1,000th share of SCHD this week. That's nice. Very nice. Sysum, SCHD, Vici, V, FX, AIX, and Procter & Gamble. Nice. Those are all solid pickups right there. Dallas in the building. What's up, my friend? Good to see you. B Hall with some more Pepsi and Chipotle. Nice. I haven't had Chipotle, and I can't tell you guys how long. My wife and I, we love Chipotle. Love, well, I don't know. Do I want to use the past tense? We really do like Chipotle. Um, but when we want something like that, lately we've been going to this other place called Cafe Rio, like pretty much same idea, same exact concept. But Cafe Rio just, I don't know. I think it's better. I think it's better. Since we started going to Cafe Rio, stop going to Chipotle. The tortillas, I think that's one of the things that makes the difference. Their tortillas are just unreal. Although I will say, sorry, now I'm on this. It's a can of worms. Chipotle, I do think I like their cheese better. I'll leave it there. Okay, Danny picked up 27 shares of SCHG, 4 shares of QQQI. There you go. Loving the red days. I hear you, man. I hear you. Liv, hope you had a great week as well. Thanks for tuning in. I'm happy to see you. Jay picked up some SPMO and SCHD. Nice. And then a little FTEC. Good stuff. Okay, Dallas says, I'm going to start dropping and adding Novo Nordisk. Oh, there he goes, guys. There he goes. Oh, he sees a little bug or something. Get it. Get it. You better get it. Yep. Right there. Get it. Hey. Get it, buddy. You got to earn your keep around here. Okay, let's keep going. Okay, interesting. Okay, so selling Monday, buying back in for October lows, taking profits in BWXT. Okay. Nice. Anthony, my portfolio hit 12K, up 19% this week. Holy cow. What caused the jump? That's pretty unreal. Looks like Andy just started a position in Hess Midstream. There you go. Wow, look at this, guys. Brandt went from 484K at the start of the year, now up to 624K. Very good. Nice. Gordita's first time in the stream. Welcome aboard. Welcome aboard. I hope you enjoy the stream. And I'm about 5 minutes behind in the chat. Not too bad. Not too bad. Okay, Hassan, this week I bought heavy on Kenvue and Zoetis. Nice. Kenvue, you know, I don't know how I feel about Kenvue, to be honest. Yeah, I don't know how I feel about that one. I'm curious, what's the draw to Kenvue? I mean, I get it. I think they've got some good brands, but so far the financials, at least from what I can see, are not looking great. So I'm curious to know what you see in that one. It is down 27% over the last year, though. Dividend yields up 5%. So maybe it's that. Maybe it's those kind of things. My man Antonio sipping a Modelo. Good stuff. Loading up on ARCC. Nice. Eric picked up some Costco. Yeah, District Trailers has a good question there. Yeah, Matt, how many positions do you have now? It's been a while since we've talked. I know, man. Hope you're doing well. I'll save that question, Matt, and I'll go back to it. Okay, so Shane does want to know about the airport. Okay, cool. Okay, guys, I'm almost caught up. Vasco, what happened with ODFL? Yes, so we can talk a little bit about those. I'll be talking about FactSet in my video going out tomorrow. Nice. John's up to 500 shares of SHD. Seth, 2 shares of Wingstop. Wingstop's looking good. Big drop in the last month for those guys. They're down like 25%. Crazy. Yeah, looks like Div bought some SHD. Mike with some Realty Income. Agree in Hess. Scott with a little JIP Q. Nice. Jose's got some milestones for us, guys. Lots of big wins since the last time I hopped on. Hit 50K in the brokerage. Open up a position in Zoetis and SPGI. Very good. Hit a 50% return for the last 1 year. Just amazing. Wow, unreal. Good job. Okay. I think I'm pretty... Ooh, Scott. Ooh, that's a tough one, man. I hope it ends up being a good investment for you, but AGNC to me is like the poster child for yield traps, but I hope it ends up being a good one for you. Okay. Oh, Dallas is going to start drop shipping. Okay. Got it. Yeah, Jose's got a good question too about Cintas. We'll go back to that. Um, nice, Jana. This is really cool. Thanks for what you do. We recently retired at 59 and 60. Congratulations. I'm jealous. And you've helped us get our dividend portfolio in order so that we could retire early. That is awesome. That's like one of the coolest things to hear. That's really cool to know that I've had a positive impact and have actually been helpful. Thank you for sharing that with me. Congratulations on the retirement and keep up the good work. That's incredible. Oh, Chris bought 2 new positions in GLDM. That's a gold something or other, right? Gold. Okay. It's SPDR gold mini shares. So it's like, is it just gold? Basically, they just hold gold, and then bull is Webull. I don't know. What's the draw to Webull? I'm curious about that one. Okay, guys. Just when I thought I was caught up. Trevon, actually, I'll answer this one real quick because this is a pretty quick answer. So Trevon wants to know, what do you think about activist investment management, Elliott, pressuring Pepsi to separate its bottling operations? Could this help Pepsi be more like Coca-Cola as of syrups? So truth be told, this is actually the first time that I'm hearing about it. I've got to say, I really don't keep too close of tabs on Pepsi. But, kind of my knee-jerk reaction, which just as a disclaimer could be, I'm working with very limited information because like I said, this is the first time I'm hearing about this. But yeah, I think my knee-jerk reaction is that it could potentially help them be more like Coca-Cola in the sense that they won't have to worry about the bottling. They just make and sell the syrup to the bottlers and the distributors, and then they take care of the rest. I think that maybe that's kind of what they're going for. It seems to really work for Coca-Cola. So I wouldn't really blame them for pushing this, but I don't know. Maybe it'd be a bit more difficult to do that. Well, actually, I was going to say, no, never mind. I'm not even going to say that because it doesn't make any sense. Yeah, I think it could help Pepsi be more like Coca-Cola. And like I said, it works for Coca-Cola. So I'll just leave it there. I don't know that I have much more of an opinion on it beyond that. If I would have kept talking, if I would have kept going and not stopped myself, I just would have gone in circles about something. So sometimes I have to do that. I have to stop myself before I get too ahead of myself. Okay. Let's go through some of these comments, guys. And I apologize if I missed some of yours in the chat. I'm jumping over now just to what I have saved. What is this? What do you mean? What is this? Okay, so let's go through these. Let's go through these questions, guys. So this first one's from Korean Cardboard. Hi, I'll be on a walk. So Korean's not even in this one, but this is a good question. This is something that's actually been on my mind lately. Ryan, any concerns for BDCs paying dividends going forward with the interest rate cut and another future expected rate cut? Yeah, so like I said, this is something I've been thinking about more lately. As it does look like there will be more rate cuts. We've seen some business development companies like Blue Owl Capital Corporation is a great example. I think they're down about 7% in the last month or so. Pretty much all has to do with, interest rate expectations moving forward. And I can't say that I'm too concerned. For a lot of these business development companies have went through a period and survived a period where the interest rates were basically zero. So they've been through low interest rate environments before. And fortunately, a lot of, at least the BDCs I own, Main Street Capital and Blue Owl Capital Corporation, over these last few years when the interest rate environment has been favorable and it's been higher, they didn't really go too crazy raising the regular dividend, as kind of an example of a company that did the opposite. So back in 2022 or 2021, 2022, whenever it was, UPS, which is a company that we've talked about quite a bit here on the channel lately, they did that. They went through a really good time, good couple of years. They got, a little too gung ho, and they raised their regular dividend like 50%. And now that's kind of got them in hot water to the point where now the dividend doesn't look to be sustainable. So I'm glad to see that Main Street and Blue Owl and other business development companies didn't take that approach. Instead, they have been issuing these special dividends every single quarter. And the special dividend is basically just whatever's, because they have to pay out like 90% of their income in the form of dividends, the same way that that real estate investment trusts do. And so, excuse me, whatever excess income they were generating above the regular dividend, they were paying out as a special dividend. And so what I think will probably happen, at least first, is if they, get in hot water, then they'll just stop paying the special dividends, excuse me. But from what I know, at least from the BDCs I own, they're still paying these special dividends, at least for now. So to wrap this all up, no, I don't have any serious concerns about business development companies, because it still does seem like they're generating, once again, at least the ones that I own, this isn't true across the board. The ones that I own, the dividend still looks to be very well covered. And also, it's not like they were expecting rates to stay high forever either. So I don't think this is their first rodeo. And so I feel pretty good, at least about the ones that I own. I do think that we will see some of the share prices come back down, though. But then again, it becomes a question of, is that something that really even matters if you're holding these for the income? It's kind of interesting, though, because I say that, but then Main Street Capital Corporation is up like 30 or 40 something percent in the last year. So benefiting from share price appreciation with these BDCs is totally possible, even if it's not something that maybe you expected going into it. So we may see some of the share prices deflate a little bit. So okay, let me jump over to the chat real quick. So, Edvard, no, the stock market is closed as we're streaming this, unfortunately. So no, and to answer your earlier question, yes, this live stream is something, I'm guessing this is your first time in the live stream. This is something that I do every single Friday night, typically every Friday night, and it is just me answering questions, just hanging out. We're just shooting the breeze. It's exactly what it sounds like. It's a dividend happy hour. Everyone's just hanging out, having a good time. So there's no real rhyme or reason to it. But no, I will not be buying stocks right now because the market's closed. Okay, so let's move on to this next question, guys. This one's from Fast Eddie, who wants to look at Palantir's numbers. I know it's not a dividend stock, but just wondering what you think of the numbers. Thank you. We'll do it very quickly. We'll do it quick. So, because we only have about 25 minutes left here in the stream. So let's jump over here, guys. We are looking at Snap stock. And if you want to start using this for your own stock analysis and stock research, there's a link to it in the description. And we're looking at Palantir, who's up 377% in the last year. So just insane, very insane. And look at these valuation metrics right here. The PE ratio in the trailing 12 months, almost 550. The price to free cash flow, 240. Unreal. Free cash flow yield, 0.4%. Ugh, gosh, goodness gracious. Obviously no dividend. Here's the charts. Okay, so they just became positive in the last couple of years, which is good to see. They're actually making money. Pretty solid growth. The 5-year revenue growth rate's 27%. If we look at the earnings per share growth rate, looks like it doubled between 2023 and 2024, and it's up about 50. Well, yeah, it's up about 50% or so in the trailing 12 months compared to all of 2024. Let's look at the free cash flow here. It looks like it didn't quite double between these years, but still some very impressive growth. And it's up about another 50% or so between 2024 and in the trailing 12 months here. So really solid growth. I guess the big question with this one And another thing, sorry, it's good to see that they have negative net debt. So a lot of cash on the balance sheet. That's really good to see. The big question with this one, and actually let me know your guys' thoughts on this in the chat. Um, I mean, would you buy this right now? I mean, 550 PE ratio. It's already up almost 400% in the last year. Is Palantir a stock to buy right now? What do you guys think here in the chat? Take a sip of water while I wait for the responses to come in. Steven says no. Striper Kid says no. Okay. Dallas says it's overvalued, but it's still going to go up. People love it too much. I think that's a very fair assessment. Edward, welcome aboard. I'm happy to have you. Thank you for tuning in, and I hope you enjoyed this random hour here that we've got going on. It's always a lot of fun. So Aussie says not his cup of tea. Jose says great to hold on to, too risky to open a new position. Fast Eddie still thinks it's a buy. B Hall says nope, I'm retired. Striper Kid says wait for it to drop below 130. Sam says no. Oh, nice. MC, first time here, new to investing, and will be starting next week. That's awesome. Congratulations. And also great decision. Like starting to invest is going to be one of the best things that you'll do. So great job. Have been going through, looking at your past videos and learning a lot. Thank you. Well, no, thank you. I appreciate you tuning into the videos. That's awesome. And I hope you enjoy them. Joe Dirt says definitely not. Sam says it's super expensive. Eric says no. Matt says no. Yeah, Anthony says if it's in the S&P 500, I already hold it. Yeah, man says overvalued. Thrawn says no. Why did you stop the short videos about the 52-week low stocks? I haven't stopped them. I put one out, I think, a few weeks ago. I usually do one a month. Sir Dudebro Man says no. Wow, Striper Kid says my average cost is $11.08. There you go. Yeah, Sam says it's risky, but I see why people are buying. See, to me, I look at so it looks like the general consensus is like no. So I mean, it's kind of gotten to the point where it just seems to me like this is just, I mean, the growth is very impressive. There's no doubt about that. But I think it's undeniable that there's a lot of hype and there's a lot of momentum driving up the share price. I don't know. I just can't help but think that a 550 PE ratio makes any sense to buy right now. And with that said, if I could be wrong, but like I said, I do think at this point, a lot of it's just hype and it's momentum. And I think that it's heavily inflated. And I think, any change of wind in the opposite direction will really cause a big deflation in the share price. And when that will happen, who knows? Who knows? And it's kind of like, who set it up here? It was, sorry, guys. It was, I think it was Dallas. I think Dallas said it. Let me find it. Man, I think I missed the comment, but basically, I'm pretty sure it was Dallas. Dallas said something to the extent of no, it's expensive, but it'll keep going up because people love it too much. And I think that's spot on. I think that that's exactly it. That's the reason why it's going up is because of the sentiment towards it. But as soon as that sentiment changes, which will happen, okay, it was Dallas. Cool. When that changes, when the sentiment changes, which will happen as soon as there's like any indication of any sort of slowdown. Okay, as soon as they put up even like a mildly, I don't even want to call it bad, but a mildly lower quarter of earnings, I think you're really going to see some crazy reactions from shareholders. Okay. Yeah, this is spot on too. I feel like with Palantir, the ability to grow your investment is harder now, and there could be better opportunities elsewhere. And also, like, I think it kind of depends what you're okay. No, well, getting tripped up here. So the reason to buy this, the reason that an investor would want to buy this is because they want the growth that the stock has seen as of late. Once again, it's up almost 380% in the last year. You would be buying into it because you would want those type of results moving forward. And I just could be wrong, and there's no way of knowing, but I don't how can it go how can it go, crazy amount higher than where it's at right now? I don't know. I just don't see it. So I think if you're buying this expecting crazy outsized returns for an extended period of time, eh, I'd look elsewhere. I think you're too late on this one. And even if you wanted to buy it because you think it's a good company, then maybe wait for the dust to settle. Okay, but anyway, enough about Palantir. Let's move on to the next comment. This one's from Aussie. He wants us to look at Roper Technologies, ROP. It's barely coming off a one-year low. Curious on your thoughts now, considering it's under $500 a share. Yeah, so let's check that out. So ROP. This is exactly it. Spot on, Striper. Okay, so let's go over to the screen, guys. Get back over here to Snapstock. So we're looking at Roper Technologies. Like Aussie said, it's coming off a one-year low. Looks like the 52-week low right here is 492. It's currently at 499, so it's up a little bit today. What's it done in the last month? In the last month, it's down 5.5%. Year to date, down 2.5%. And then over the last year, down about 10%. Okay, 6 red flags. We'll see what's going on there. Pretty nice snap score, like very solid growth, extremely profitable. Debt's looking good. Let's see what's happening in the dividends and buyback section. That's interesting. Excuse me. And then capital efficiency looks really good. Sorry, guys. Okay, and you know what? Just actually looking at the valuation real quick, and I don't know what the numbers are looking like, but or the growth numbers, I should say. So PE ratio of 35.8. We'll see if it's justifiable. This is about 17% below the 5-year average, so looks to be trading lower than, or valued lower than it has it's valued lower than where it's been on a historical basis, I should say. Free cash flow yield's looking good, 4.3%, up 34% compared to the 5-year average, so that's good. Okay, so just looking at the charts, I mean, this looks pretty solid. I think consistent revenue growth. It's really been a similar pace over the last 5 and 10 years. There's been a couple years where it's actually really just one. Only in 2022, it looks like the revenue took a step back. But otherwise, the general trend is up and to the right. Like I said, it's growing at a consistent rate. Earnings per share growth looks pretty dang good. Free cash flow growth looks really good as well. Tough year in 2022, but otherwise, yeah, this is rock solid. So that's great. Yeah, profitability is high. Looks like margins have actually kind of increased over the last decade by about 10%, the gross margin. Looks like the net income margin's grown a little bit, and the free cash flow margin actually has as well. So that's a great sign. Looking really good. And the free cash flow margin is considerably higher than the net profit margin, which is interesting. Okay, so it's got debt here across the board is red flags. This, okay, so the red flag here is because over the last 10 years, they've added a lot of debt. And I think part of it is this right here. But, I don't think this is all too concerning. Probably doesn't deserve to be a red flag. The net debt to free cash flow, so the 5-year average net debt to free cash flow is this 5.08, which is why it's showing a red flag. And it's this number, actually these two, that are throwing it off. But in the trailing 12 months, net debt to free cash flow is only a 3. So that looks good to me. Interest coverage ratio is high, 8.36, right above the mark, right above the threshold where I'd like to see it. So I don't think any of these need to be red flags. So, and actually thinking out loud, what we should probably do, and maybe we've made a note of it already, I don't remember. Soren, you might be watching this. I don't remember if we've made a note of this or not. What we should do is instead of making the red flag based on the 5-year average, we should make it based on either the trailing 12 months or the most recent year. I think that probably makes more sense because we're looking at the balance sheet. We're more concerned with like a real-time snapshot, I think. Same thing with the interest coverage, actually, I would say. So yeah. Okay, let's scroll down. Sorry, guys, just making a mental note there. Dividends and buybacks. So we're getting a low starting yield. Looks like the yield in the trailing 12 months is a little bit above the 5-year average. Not by much. It's like just barely above it. Dividend growth has been very nice and consistent, though. About 10% over the last 5 years, a bit higher over the last 10. And it's been really consistent. That's great. I think that's a great sign. Yeah, payout ratios are stable, very well covered. They're issuing some shares here, so that is something to keep an eye on. Returns on invested capital do look pretty low, which is actually surprising compared to everything else that we've seen. So not sure what that's about. But overall, I think this is a pretty solid looking company. I would say, though, like, no, I'll just leave it there. I think this is a solid looking company. I don't even know. I didn't even look to see what they do. Okay, so they're in the industrials. Huh. Okay, I'll look more into that later. But yeah, this seems like an interesting business. Good looking financials. Yeah, Dallas NVO, Novo Nordisk. We typically look at that one like every week. I feel like someone brings that up. The financials are definitely looking good. I will give you that. Okay, so Shane wants to know what we think of PAC, which once again is that Mexican airport. I won't even try and pronounce the name again. I'll butcher it. And they own a handful of airports in Mexico, and also I actually think they have one in Jamaica. I could be misremembering that, but I'm pretty sure they have one in Jamaica as well. But this is a pretty interesting business, and it might even tell us which airports they own right over here. So, oh, guys, I smell dinner. Okay, so I could be wrong about the Jamaican airport. Could be wrong. It doesn't say it here. So they own 12 airports in Guadalajara. I know I butchered it. I'm sorry. Puerto Vallarta, Tijuana, San Jose del Cabo. So basically Cabo, Puerto Vallarta, Tijuana, and so basically the big tourist destinations with the exception of Cancun. And then some of these other ones right here. I think airports are a really interesting business. I first stumbled upon this stock a year ago or a couple of years ago because I was really interested in looking at publicly traded airports. I didn't find any, I don't think, in the United States, but I did find this one. And yeah, I think that the business is just really interesting. It's had a great year. It's up 50% just in the last year. There was a moment where I really thought about pulling the trigger on this, but I don't know. I didn't feel comfortable. I didn't know enough about how businesses go down there and their relationship with the government. I just didn't. For me, I think it added some risk that I wasn't willing to take on. But the financials looked great. I mean, this is what we're looking at here: really solid revenue growth, crazy earnings growth, crazy free cash flow growth. I mean, everything just looks unreal. Very high margins as well, like near 60% gross profit margins. 25% net profit margins, about the same for the free cash flow margins. So that looks really good. Debt has been going up quite a bit. So they've been taking on a lot of debt, but still it looks to be very well covered by the free cash flow. In 2024, the net debt to free cash flow was only 3.91, which is kind of crazy to see considering how aggressively they have been adding debt. And look at this, guys. They're adding about 36.6% debt to the balance sheet on a net basis every single year on average since 2020. So that is a lot of debt. That is a lot. Interest coverage ratio is very low too. So it's kind of a red flag, I will say. That's the one thing that I don't necessarily like. But The dividend stats are okay. I mean, the starting yield has definitely come down as the share price has gone up, but man, it used to be upwards of 5%. Looks like it's growing on average by 4 or 5% per year. And I would say, like, back when it was the yield was around here, I think that's a pretty fair, those are pretty fair stats. A 5% yield with a 4% growth rate. I don't think that's too bad. I really don't. Okay, so the earnings payout ratio, very high. Free cash flow payout ratio, very low. So very high returns on invested capital too. So, I think there's a lot to like about this company still. I think that if you understand you know, the corporate environment down there and you're comfortable with it, then knock your socks off. And also if you're comfortable with the debt, those are the two things that kind of keep me at bay. But otherwise, I think there is a lot to like about this company right here. Oh, so dinner it's nothing special. It's just we're having burgers and fries. My wife was craving this morning. She said she was craving waffle fries. And I was like, "Yeah, that sounds pretty good to me." So, we just decided to do some burgers and fries. And I can smell the fries right now. Okay, guys, we still have like five now, 5 comments to go. This one's a pretty quick one from Pat. What are your thoughts on Starbucks closing stores? Yeah, sorry, I'm looking at the comments now. Real quick. Dude, I put out a whole video on UPS, very in-depth video just a couple of weeks ago. If you go over to my channel, you can't miss it. So if you want to learn about UPS, go check that bad boy out. And thank you for asking so nicely, by the way, too. But anyway, going back to Starbucks. And just for some backstory, I think Starbucks announced, let's actually pull it up. I think Starbucks announced they were going to be closing like 1% of their stores. And they were going to be laying off some people. Yeah, so it's this right here. So they announced on Thursday, closure of coffee houses. We identified some stores where we're unable to create the physical environment that customers and partners expect, or where we don't see a path to financial performance. And these locations will be closed. Also plans to cut 900 jobs in its support teams and close many open positions. So it will incur, that sucks. It will incur approximately $1 billion related to the store closures, with 90% of the expenses attributable to the North America business. Whew, that's a bummer. So, I mean, an extra $1 billion hit financially is going to suck, especially as far as the dividend goes, because it's already pretty dang tight. The coverage is pretty tight there. So I think that just kind of adds to the concern about the dividend, at least in my opinion. As far as the closure of the stores, if it really is what they say and they're underperforming financially, then yeah, why keep them open? What's the point of keeping them open? It is interesting though, because I remember so anyway, I think it could be a good thing. Hopefully it'll save them money in the long run, even though it'll cost them up front. What's interesting though, I was going to say, I do remember when Brian Nickel came on, I remember him saying something. You guys might remember this and can correct me in the chat. I do remember Brian Nichols saying something like, he saw a Starbucks in the future that had twice as many stores as it does today. Like, he was saying that we could still double our store footprint from here. And I remember hearing that thinking, man, I don't know. I don't know about that one. I want to believe it. I really want to believe it, especially because that's a big part of, how they've been continuing to grow their revenue over these last handful of years. Is new store openings is huge. And so it's like, yeah, I would like to believe that's true, but I also don't know. That seems so outlandish to me. And now to hear that they're actually closing some stores, okay. I don't know. We'll see what happens. All in all, I'm really rooting for Starbucks. I think I sold. I think Russ and I both sold at a pretty good time. I'm really rooting for Starbucks. I mean, I think they'll be fine in the long run. I hope the dividend stays intact. I kind of I'm kind of not banking on it, especially after more news like this. If more news like this comes out where they're going to do things that are going to, incur more expenses, which could be the case since they are, going through this reinvention. They really are trying to invest in the future of the business, which is a good thing, and they should do that. But the dividend could come. The dividend could be sacrificed in the process, is what I'm trying to say. Okay. Let's see, guys. We've got a few more comments. We're gonna rapid fire these. Couple more. We're just gonna rapid fire a couple more because I got to wrap it up here. Yeah. So Vasco, what happened with Old Dominion Freight Line? So one of the things let's just start there before we move on to the next one. So Old Dominion Freight Line has been pretty much suffering all year long. Lower freight volumes, concerns about the economy and tariffs. There's a lot of headwinds facing companies like Old Dominion, and it's not just them. It's a lot of the companies in the freight and shipping industry. It's like them. FedEx is being impacted. UPS is obviously being impacted as well. And so that's really what's causing Old Dominion share price to come down, because lower freight volumes equals lower revenue, and that kind of trickles down to the bottom line. So it does hurt them financially, and that's just kind of the nature of the business. It is cyclical, and it depends on what's going on in the economy and some geopolitical stuff as well, apparently. But I think in the long run, Old Dominion will be just fine. Very profitable business. Very high quality business. Now, as far as FDS, which is FactSet Research Systems, and once again, I'm going to be talking about FDS tomorrow. The stock, and I talked about it last month, but since I last talked about it going into September, it's down like another 24% or something like that. And earlier this month, they put out some quarterly earnings that actually I don't think were bad. I mean, they did beat on revenue. They missed a little bit on earnings per share, like missed by 8 cents, but still the earnings per share was up like 8% year over year. So it still grew. It just missed analyst expectations. So I think that's one of the things that caused the share price to come down. And also in the earnings report, they did issue some conservative revenue guidance for this upcoming year for 2026. So maybe the combination of those things really sent the share price heading south. And also, just generally speaking, a lot of people are concerned that AI will kind of render the business useless. And in case you don't know what FDS is or what FactSet does, basically they are a data provider to the entire financial industry. So think banks, wealth managers, asset managers, pretty much anyone in finance can use FactSet's data. And so people think that AI is just going to come disrupt that. And you guys should look more into this. It's actually a really interesting business. It's a really, really good looking business. They're actually working AI into like all of their platforms and all of their products. So instead of being disrupted by AI and becoming irrelevant, their goal is to just kind of go with gravity and become, well, I don't know, just get hip with the times, I think, for lack of a better phrase. I don't even know if that is a phrase. I might have just made that one up. Get hip with the times. Gosh, I'm getting old, guys. I'm getting old. Okay. One more, guys. One more comment here. Serious trigger warning. Yeah, but thank you so much for the kind words. I really appreciate it. And someone asked, like, when's the due date? Someone asked earlier. I don't remember who it was, so I apologize. But any day now. She's coming any day. So with that said, too, and I'll keep you guys posted too as things play out. But there may be a period of time where I may not be able to do the happy hours. We'll see how it goes. But yeah, should be any day now. Okay, but this last question, guys, this one's from Jose. Last one, then we're packing it up. Question about stock picking. So there are stocks like Cintas who have amazing financials and grow their dividends really well, but no one talks about them. This is actually a really good question. I'm going to save this for the future. Amazing financials and grow their dividends really well, but no one talks about them, and I'm curious why. Am I missing something? Yeah, this is a really good question. And this is a good note to end on too. So I think one of the reasons that certain stocks are not talked about as much as maybe they should be. Cintas is a good example. I agree with you. One of the reasons is a lot of people just don't know about these. Most people just focus on the big popular names. Like right now, the Googles or Alphabets, just the Mag 7 stocks, and pretty much the hype stocks, hype stocks, the Palantirs, the SoFis, what else? Robin Hoods, Open Door is another one. I don't know. Give me some more hyped up momentum stocks, guys. I'm drawing blanks here. But the point I'm trying to get to is most people, when it comes to individual stocks, they just stick to those big recognizable names, the ones that they hear about the most, and don't really venture too much beyond that. I do think that the more GameStop and AMC, yeah, for sure. And as a result, this is why I think that you see a lot of portfolios look the same. I don't know if you guys have caught this, but I've been doing these portfolio reviews on Blossom, just short 60-second clips. I'll post them to YouTube, post them to TikTok, I'll post them to Instagram. Which, by the way, guys, go shoot me a follow on Instagram. I'll pull up my page right now so you can see. It's at Retire with Ryan on Instagram. I am 2 followers away from hitting 1,000, and I am determined to hit that 1,000 follower mark today on Instagram. So you guys help me out. Go shoot me a follow on Instagram. 1,000 followers. Let's get there. I just need 2 of you guys. There's 117 of us in the stream. Okay. What was I saying? Okay, so I've been doing these Blossom portfolio reviews, and I just, after doing so many of them, kind of feeling like all of these portfolios are just looking the same. It's all the same names. It's NVIDIA, it's Alphabet, it's Microsoft, it's Palantir, it's, it's those every single time. And there's a reason for that. Like, these are good companies for sure. There's no doubt about that. But I don't think many people want to venture beyond that. Yeah, I think when you get to the root of it, many people maybe just have like a mild interest in stocks, but not enough they have an interest enough to buy these individual companies, or they think here, someone's asking about the Instagram. Sorry, guys. Let me see if I can put my profile here in the comments. There. It's like Joey here said, they're not sexy. The big normal names, they're sexy, they're safe. You're not really going to get in too much trouble for buying the things that everyone else is buying, and a lot of people don't really like to go deeper than that or beyond that. And that's one big reason why you don't hear about a lot of companies, or why there's a lot of companies like Cintas that are under the radar. I think Zoetis was like that too. I think Casey's General Store, I think Williams-Sonoma was like that. I think that there's a lot of great stocks out there that you just don't hear about for that reason. A lot of people just don't care enough to I know. I thought I had a hard stop. I'm just wrapping this up. A lot of people just don't have enough of an interest in it to kind of look for those hidden gems. You know what I mean? But personally speaking, and I think a lot of you guys are probably the same way, personally speaking, that's like the fun thing for me. I really like finding these hidden gems, these under the radar stocks that no one else is talking about, especially because I feel like people give out so much flack for not buying. Like, if you don't own NVIDIA, if you don't own Palantir, if you don't own SoFi, then you're like a loser, or you're doing something wrong. If you don't own kind of like the cool stocks or the it stocks of the moment, people will get on you for it. They'll definitely criticize you for that. I've certainly been on the receiving end of that. And so I don't know, I'm sick. I like to find these hidden gems, these other things that no one's talking about, and share them with you guys, and also hopefully generate solid returns on them to prove that you don't just have to buy the same names as everyone else. That's fine. That's a fine way to go. if you're going to do that, you might as well just buy the S&P, I think. But there's a lot of great companies out there, and I think the fun of investing is turning over all of those different stones and seeing which ones jump out at you, because you never know. You never know when you'll find your Williams Sonoma or your Clear Secure or your Zoetis or you name it. So anyway, I think that was I definitely got sidetracked through that response. So apologize, guys. But that's a great question. I'm going to cover that in a future newsletter for sure, like in the Since You Asked section. So, but anyway, guys, we are going to wrap it up here. 8 minutes over. I really tried to do the hard stop, but we did end up on a good note. Yes, I do have a Discord group. There's a link to it in the description of the video. It's free to join too. So everyone go join the Discord group. I don't know. Tempting, Vasco. It's tempting. We'll see, man. We will see. But guys, what else I got for you? I've got a video coming out tomorrow morning. 3 deeply discounted dividend stocks to buy going into October. I got 3 great picks for you. Definitely check that out. It's going out first thing in the morning. Otherwise, I hope you all have a fantastic weekend. Thank you for those of you who did shoot me a follow on Instagram. Looks like we are now at 1,002. Look at that. Thank you guys so much. Thank you guys so much for that. Boom. See if we can get a few more. But yeah, thank you guys all so much. I hope you have a great weekend. Stay out of trouble, and I'll see you in the next one.